3, 2, 1, go.
Hello, Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Fatin Afika binti Idris. My metric number is 28051. Equity investment represent ownership interest, such as ordinary, preference, or other capital asset. The degree to investors acquires an interest in the share of investee determines the accounting treatment for the investment subsequent to acquisition. Costs include purchase price of the security, while broker's commission and fee are recorded as expense. Equity investment are generally recorded and reported at fair value because do not have a maturity date and do not have a fixed interest and principal payment schedule. Debt investment are characterized by contractual payment on specific dates of principal and interest on the principal amount outstanding. In general, IFRS requires that companies group investment in debt securities into three separate categories for accounting and reporting purpose. First category is held for collection, which is investment held with the objective of holding asset in order to collect contractual cash flow. Second category, held for collection and selling, which is investment held with the objective to both collect contractual cash flow and sell financial asset. Third category is trading, which is all that is not for collection or for collecting and selling. These investments are buy and held primarily for sale in the near term to generate income and short-term price difference. Based on the senior accountant's advice on 1 January 2018, Platinum berhad purchase bond at a 12% stated rate with a maturity value of Rm800,000 for Rm860652. So, for the general entry, we debit that investment and credit cash with value Rm860652. This is a bond amortization schedule. 12% bond purchase to yield 10%. To calculate the cash received at A, we take a maturity value times 12%. For B, we take carrying amount year before times 10%. For C, cash received minus interest revenue. And G, carrying amount of year before minus with bond premium amortization.
Okay, hi. My name is Muhammad Arif Najmi bin Ismail. My metric number is 280314. Okay, the answer for question 4 is we can take the value based on question 3. The journal entry for this question is General Journal Platino Berhad. The date is 2019 December 31. Okay, the answer is debit interest receivable 96,000 and credit debt investment 10,928 and credit interest revenue 85,072 ringgit. Okay, for the answer for this question, the question state that based on the senior accountant advice on 1 January 2018, Platino Berhad purchased bond at a 12% state rate with a maturity of 800,000 for 860,652 ringgit. Okay, for the general journal for maturity value is the General Journal Platino Berhad. The date is 2023 January 1. Okay, debit cash 800,000 ringgit and the credit is debt investment which is 800,000 ringgit. Okay, for the answer for question 6, the sentence said that on 10 February 2018, Platino Berhad purchased 100,000 ordinary share of Sri Pagi Berhad for 23 ringgit and 50 cent per share, including a transaction cost. Okay, on 30 December 2020, Platino Berhad received a cash dividend of 55,000 on its investment. Okay, for the general journal for this question is General Journal Platino Berhad. The date is 2018 February 10. The debit is equity investment 2350,000 and the credit is cash 2350,000. Okay, and then in 2020 December 30. Okay, the debit is cash 55,000 and the credit is dividend revenue 55,000.
Assalamualaikum and hi. My name is Siti Shaleha binti Jahar. My number matric is 280544. As a senior accountant of Platino Berhad, I will suggest the firm to invest non-trendy investment rather than bond. It is because during the financial crisis and economic meltdown caused of COVID-19, interest rates are high, businesses are closing, and the unemployment rate is also high. Among other factors, increasing the likelihood that interest and face value of bonds loaned to businesses will be reduced. On the other hand, acquiring equity investment might save the firm income because share prices are often low during a crisis, and it will earn profit in the end in the form of dividends or profit upon eventual disposal because share price may be high in the near future standard situation. On 1 July 2018, Platino Berhad issued a new 8% Rn 3 million 5-year bonds, amanah bonds to yield 6%. Interest is payable annually, so we will use ordinary annuity using the effective rate 6%. So the interest is computed Rn 3 million times 0.08, which is 8% equal to Rm 240,000. For the bond amortization schedule for amanah bonds up to 30 June 2020, for the date 1 July 2018, we get from the total present value which is 3,252,876 ringgit Malaysia for the carrying amount. For the first paid date which is 30 June 2019, the cash paid we calculate from the interest compute which is 240,000 ringgit Malaysia, and the interest expense we get from the carrying amount times the effective rate and get 195,172 ringgit Malaysia. And for the premium amortization, we calculate the interest expense minus cash back and get 44,882 ringgit Malaysia. And the last, the carrying amount we calculate from the first day issue minus the premium amortization and get 3,208,048 ringgit Malaysia.
Assalamualaikum and hi everyone. My name is Noadila binti Muhammad Shukri. My matrix number is 280228. Answer for question 10. When the bonds retire on 2nd July 2020, Platinum Berhad should recognize a gain on retirement. The working is a carrying amount of bond which is 3,160,531 ringgit Malaysia. This amount we get from the bonds amortization schedule on the retired date. Next, for the requisition price, we take the amount of bonds which is 3 million ringgit Malaysia. We multiply with bonds scalable at retired date which is 95. So 3 million ringgit Malaysia multiplied by 0.95. So we get 2,850,000 ringgit Malaysia. So we get the gain on retirement because the carrying amount greater than requisition price. So the amount of gain is 310,531 ringgit Malaysia. Answer for question 11. The journal entry for excavator from Carlton Berhad on the 1st January 2020. Debit list asset 115,830 ringgit Malaysia and credit list liability 115,830 ringgit Malaysia. The working is annual payment which is 15,000 ringgit Malaysia. This is first payment on 31st December 2020 and we multiply it with present value factor which is I equal to 5%. This is implicit rate, while N equal to 10 which is 10 years. This is the period of lease term. So the amount is 7.722 we get from the PV and PVOA tables. So the PV of lease payment is 150,830 ringgit Malaysia. For the truck from Malaysia Berhad, there is no journal entry because this is an operating lease. For the crate from Tinker Berhad, the journal entry on 1st July 2020, debit list asset 44,530 ringgit Malaysia and credit list liability 44,530 ringgit Malaysia. So the working is annual payment is 10,000 ringgit Malaysia. This is the first payment on 30 June 2020 and we multiply with present value factor I equal to 4%. This is the implicit rate, while N equal to 5 which is 5 years and this is the period of lease term. So the amount is 4.452. This amount we get from the PV and PVOA tables. So the PV of lease term for the crate is 44,520 ringgit Malaysia. Answer for question 12. The first criteria is transfer of title. For the Carlton Berhad is yes, while Malaysia Berhad and Tinker Berhad is no. The second criteria is quoting purchase option. For the Carlton Berhad is yes, while the Malaysia Berhad is no. The third criteria is economic life test. For the Carlton Berhad, we take the lease term divide by the estimate economic life, which is the lease term for the Carlton Berhad is 10 years and the estimate economic life is 20 years. So we get 50% for the Carlton Berhad. Next, for the Malaysia Berhad, we take the 7 years for the lease term and 9 years for the estimate economic life. So we get 78%. Next criteria, the PV of lease payment equals at least substantially all of FV of the lease asset. For the Carlton Berhad, we take the 115,830 ringgit Malaysia, which is the PV value, and we divide by the fair value of the inception of lease, which is 220,000 ringgit Malaysia. So we get 53%. For the Malaysia Berhad, we take the 12,000 ringgit Malaysia times the present value factor 6.002, and we divide by fair value at the inception of lease, which is 150,000 ringgit Malaysia. So we get 48%. For the Tinker Berhad, we take the 44,520 ringgit Malaysia for the PV value, divide by 55,000 ringgit Malaysia for the fair value at the inception of lease. So we get 81%. Next, the type of lease. So for the Quantum Berhad and Tinker Berhad, we recognize as finance lease, and for the Marshall Berhad, we recognize as operating lease.
Good evening, doctor. My name is Ime Nur Shakira binti Imran and my matrix number is 273174. For the question 13A, the answer for the present value photocopy machine is 60,610. However, the account clerk recorded as 60,611. The account clerk of Platino Berhad has correctly recorded the leasing transaction on the 1st July. However, she wrongly put the correct amount. According to the MFRS 116, the clerk does not record the change on lease liability to consider the interest and lease payment right after the commencing on 31st December 2020. She also does not record the depreciation expenses of the lease asset. In conclusion, the clerk does not record the leasing transaction of the photocopy machine properly. For the question 13B, the answer is under MFRS 117, operating lease were recognized in the profit or loss statement, however, kept off in the balance sheet. Only finance lease were recognized on the balance sheet. As a result, Platino Berhad does not fully recognize all assets and liability under leasing contract right and responsibility as required by MFRS 116. This will not assist stakeholders in making well-informed judgment about the business. For the question 13C, the answer is the interest for the year should be RM997 ringgit. For the principal payment, it should be 2,503, and for the depreciation should be 3,322. After the commencement date, which is 31st December 2020, Platino Berhad asked the leases should measure the lease liability by increasing the carrying amount to reflect interest, which is RM667 on the lease liability, and reducing the carrying amount to reflect the lease payment, which is RM3,500. Besides, the account clerk should record the depreciation expenses, which is 3,322 of the lease asset. So the first transaction of the 31st December 2020 is debit lease liability RM2,503 and interest expenses RM997 ringgit and credit cash 3,500. For the second transaction is depreciation expenses is RM3,322 and credit accumulated depreciation 3,322.